Hi there, my name's Ryan Satnik. I'm a mortgage agent with your home team, part of Dominion Lending Centers Alliance. What I'd like to talk to you about right now is actually probably the most rewarding part of my career, and that is doing debt consolidations for different individuals and clients. And what a debt consolidation is if you take two or more debts that you have, so say you have 2 credit cards and a line of credit, and you amalgamate all 3 of those payments into one payment and one loan. That is a debt consolidation. So what typically happens in the mortgage industry is people will take the equity that's in their home and they'll use that equity and pay off all the debts that they have, or some of the debts that they have. And what that does then is, while it may increase your mortgage payment, it does decrease your overall debt load and your overall amount that you pay per month on your debt, thereby helping you to get control of your debt faster and make it a little bit more manageable. So one of the major advantages you have with a debt consolidation is that you can take, because you're using the equity out of your home, you also get to use the interest rates on your home. So, current day 3, 4, 5% on any given property. And really that's a huge advantage, because you think about, how many department store credit cards have 27 or 30% interest? What about a credit card with 20% interest? Even a bank loan's got 8 or 9. So really, when you're talking 3, 4, 5% on your mortgage, that certainly puts you in a better light in terms of the interest that you would actually end up paying out, and potentially helps you to pay those debts off a lot faster. Particularly, I had a client, they had, a mortgage payment of almost $1,500 a month. They had various other credit and payment concerns that were coming out that totaled about another $400 a month. And on top of all that, they owed the government almost $30,000. That's really where a debt consolidation really makes things change for a client. And for this particular client, what I was able to do, I actually dropped his overall payments. We saved him almost $500 a month. We gave him the money to be able to pay off the government and any of his tax arrears that he had, and we also saved him almost 0.5% on his mortgage, and really put him into a much better position financially, and gave him a much better picture going forward. And really, that's what it's all about, because realistically, if you've got all of these debts and you're just basically essentially spinning in circles trying to tread water, really you're not getting any further ahead, and it doesn't make any sense. Why not take the debts that you have, use the equity that's in your house, pay them off, and then either use the money that was going out towards those debts to pay everything down in a more controlled fashion and in a way that you're actually getting ahead, or in the very least, then you've got everything controlled within your mortgage itself, and you don't have to worry about having 5 or 6 different payments and making sure that there's always the money to take care of them, because it will be more expensive if you're trying to pay them off all individually. My name's Ryan Satnik. I'm a mortgage agent with your home team. If you're looking for a mortgage, I'd love to speak to you.